Hello all and welcome back to the channel. Today we will talk about the results of Unity's Q4 earnings and expectations moving forward. Before we do that, take the time to like and subscribe if you would like to see more content like this, as we will be breaking down earnings calls all the time. So now, as we look at Unity fourth quarter earnings, Unity entered the most recent reporting period with a notable level of financial momentum, and its results for the quarter clearly illustrate both operational strength and an ability to navigate isolated challenges while still outperforming market expectations. The company delivered a revenue beat of approximately $35.27 million, a figure that exceeded analyst expectations that had projected revenue in the range of $33 to $34 per share, demonstrating meaningful top-line strength and reinforcing the idea that Unity's core business continues to generate steady growth even in a dynamic market environment. In addition to this revenue outperformance, Unity Bancorp delivered a strong earnings result for the quarter, reporting earnings of $1.41 per share for quarter four, which surpassed analysts' forecasts that had anticipated earnings between $1.36 and $1.38 per share. This earnings beat reflected not only higher than anticipated revenue, but also a disciplined approach to both cost control and balance sheet management, giving investors confidence that the firm remains on a stable financial trajectory. Unity also highlighted in its publicly filed reports with the Securities and Exchange Commission that the organization delivered a return on assets of 2.17% and a return on equity of 18.0%, results that signal efficient deployment of capital and provide additional evidence that the company continues to use its balance sheet effectively to create shareholder value. One important factor to keep in mind when reviewing the quarter is that Unity encountered a specific customer-related credit situation that temporarily influenced reported results. During the period, the company had one customer with approximately $15.5 million in credit exposure, and this relationship resulted in a $1.6 million pre-tax impact to the quarterly income statement due to a general reserve buildup. Unity noted that this credit relationship is well secured and is not expected to result in a material loss, but the reserve requirement nevertheless influenced the reported financials for the quarter. This type of event underscores the reality that, within the banking sector, credit fluctuations and reserve adjustments are part of normal operational risk management. However, Unity's disclosure also illustrates transparency regarding the nature of the exposure, the reasoning for the reserve, and the expectation that the exposure remains adequately protected. Unity offset this reserve-related headwind with a pre-tax gain of approximately $1.5 million that stemmed from the resolution of matters associated with Patriot National Bank, a gain that had a positive impact on earnings but is not expected to be a recurring component of the company's ongoing operations going forward. Both the reserve charge and the Patriot National Bancorp gain are examples of non-recurring items that analysts often adjust for when assessing the underlying financial strength of a banking institution, and the clarity provided by Unity regarding these elements enables investors to form a more accurate picture of the firm's ongoing performance. The earnings beat and revenue outperformance contributed to a positive reaction in the equity market, with Unity's stock price increasing by more than 4% during the trading day, closing at approximately $54.68, which is 28% growth from the of 2024. This price movement reflects investor confidence in the company's ability to continue delivering strong operational results and to manage both expected and unexpected financial events with stability. In a sector in which sentiment can shift quickly based on macroeconomic trends or credit-related concerns, Unity's ability to deliver solid results and earn investor trust serves as an important competitive advantage. Despite the positive market reaction and operational strength, Unity continues to trade at a relatively high valuation, with its stock price valued at approximately 36.6 times projected earnings for the year 2025. This elevated price-to-earnings ratio suggests that investors are pricing in continued consistency and financial reliability rather than expecting explosive high-growth performance. Many high-quality regional banks trade at valuation multiples that reflect their stability rather than rapid expansion potential, and Unity's valuation falls within that broader narrative. Unity's price-to-book ratio has also trended upward over time, increasing from 1.42 at the end of the year 2024 to 1.6 at the end of the year 2025. Although this represents a meaningful year-over-year increase, the ratio remains within a normal range for the banking industry, where institutions often trade between 1.3 and 2 times book value depending on size, risk profile, profitability, capital strength, and market positioning. From this perspective, Unity does not appear excessively valued relative to peers, and the price-to-book ratio increase largely aligns with growing investor confidence and strong reported performance. A rising price-to-book ratio can also indicate expectations for continued earnings strength or lower perceived credit risk, both of which align with investor action surrounding Unity's most recent financial disclosures. The stock itself is currently trading at a record-high share price, a fact that reflects the market's confidence in Unity's recent operational execution, the company's strategic positioning, and the strong results derived from its fourth quarter performance. Achieving a record high price is significant because it demonstrates that investors collectively believe the company is positioned for long-term stability, and it reflects a willingness among shareholders to continue supporting Unity at elevated valuation levels based on the firm's proven ability to deliver steady financial outcomes. Two primary equity research firms cover Unity's stock, KBW and Piper Sandler. Both firms have issued target price estimates that fall between $60 and $61 per share, a range that implies nearly 10% potential upside from recent price levels. These target prices reflect professional analysts' assessments of Unity's earnings potential, balance sheet quality, competitive positioning, and valuation trajectory. When coverage comes from reputable, well-recognized investment research firms, investors often use these insights as benchmarks for expected performance. And the fact that both firms' estimates cluster in the same range provides additional credibility to the projected upside. The shared analyst view reinforces the broader perception that Unity is a solid and well-managed bank that is positioned for steady long-term performance rather than hyper-aggressive growth. Overall, the combination of strong earnings results, stable credit performance despite one non-recurring reserve event, and favorable reactions from both analysts and investors suggests that Unity remains in a strong financial position. This stock is widely regarded as a reliable holding rather than a speculative high-growth investment. It is not a company that is expected to generate double-digit percentage growth in share price year after year, but it is a firm that has historically demonstrated operational consistency, disciplined financial management, and dependable performance. For investors seeking stability rather than volatility, Unity represents a compelling option, particularly in an environment where many financial institutions face heightened uncertainty related to credit quality, interest rate movements, and regulatory conditions. Unity's track record of earnings reliability, its well-managed balance sheet, and its transparent approach to communications with both regulators and investors all contribute to an investment profile characterized by long-term consistency. While future performance will depend on broader economic conditions and the company's ability to maintain its current momentum, Unity appears well-positioned to continue delivering steady results that align with investor expectations for reliability and moderate growth.